Ira Epstein, and here we are the morning after the FOMC meeting on Thursday, and this is the 15th of June, 2023. Well, I didn't get my wish. The Fed did not go with the 25 basis point hike, but they pulled a quickie on everybody. The Fed chair number one scolded. Believe it or not, that's what I considered it, the designated Fed vice chair for the word skip. He made clear, we're not skipping, we're pausing. He basically said that. So get rid of the PSH, pause, skip, hike. That's not going to be there. You're either going to pause or you're going to hike at this point. Number two, if you looked at the dot plots and you listened to the Fed chair yesterday, the next moves are going to be up, not down. Number three, he quelled, without any question, there are no rate hikes coming this year. So the naysayers won't believe that. They haven't believed it so far. They won't believe it now. You're continuing to get some buying coming into the Dow. In fact, most of the markets are finding some support. Understand that the market is also looking at what does this mean for the dollar, the metals, and so on. The markets that are taking it on the chin the most have been the gold and the silver market. Copper's getting the benefit of China trying to come up with plans right now to expand their economy. That will flow over into the energy. Anything they do to expand the economy also means energy. In the grain markets, understand where you're at. Notice I've moved to the new crops. And basically, this is weather related. And again, dry weather's coming through. I know we've got storms in certain part down south, and you're getting unbelievable Pensacola, Destin, Naples. I mean, they're burning up in heat. Big storms, parts of Arkansas as well. But this is normal. What's not normal is the amount of dryness we're getting everywhere. And that's what these markets are responding to. As for the bond and the note market, if you take a look at the 2-10-year, the reaction to it was you went back to the 90 level. So the market is viewing what the Fed did is one way, contra to what you'll read because you have a mania going on in stock market. Contra to what you read, the Fed is not off track. They are determined to take the market down to 2% inflation. They don't expect that you're going to get rate cuts this year. The dot plot says we could get 2 more rate hikes before the end of the year. The news phase, and the Fed said it, the Fed chair, he said at first we were going with 75-point hikes, then we moved down to 50-point hikes, then 25 basis point hikes. The new phase is now a pause, maybe a hike, a pause, maybe a hike, so we get to see what it is because we believe, this is according to him, that the market is getting close to what they have to do where they can sit back. Sitting back is not a drop. Sitting back is keeping interest rates higher for longer. I hope you get that because that's basically what the man said. And as for the new designate Fed vice chair, maybe you have to clear your terms first with the big boy, which is the Fed chair. So, surprising that the dollar is lower, and I am a bear now in the dollar. And you're getting this here. As I'm talking to you, European Central Bank President Lagarde is on TV explaining her policies. I'm recording it, so I will be versed on it in a few minutes as we get through with all this. I did put out today, and just so you know, coming back into the market with a lot of trade recommendations. Now, data, oh my gosh, do we have data. You had the European Central Bank announcement. They did take their rates up 25 basis points. You can see it right across here. Jobless claims in the U.S. came out at 262. That's in the right direction. They went up 16,000 and more than the expected, 245. Also, the continuing claims went up 20,000. So that's in the right direction. Import-export prices down 0.6. They expected it down 0.5. Export prices in May were down 1.9. That's pretty good. We're not at least exporting inflation. Petroleum prices down 0.59. So, you get that part of it. Let's see if I can come over to the next page. Here we go. Philly Fed business. Okay. While they expected 14.9, they got a negative 13.7. It's still worse than the prior month, so I don't consider these good numbers. Some people might, I don't. New orders index falling even further. The New York State manufacturing numbers up 6.6. Now, that's a radical positive change. Same thing in the prices paid, though, still coming up. Then we take a look at inventories. While it's not as big a decline, they're still declining on these numbers. You can see the shipment index. That picked up rather smartly, so I see that. So wobbling. Philly Fed's bad. New York is good. Interesting. Advanced retail sales were up 0.4. They expected it up 0.2. Ex-autos, they were up 0.4. They expected it flat, so that's good. The consumers out there buying. We're going to see the industrial capacity coming out now. I'm talking, but it's as we're doing it. And April business inventories will come out at 9. A tremendous amount of data. I've got to parse through a lot of it myself to figure out what it all means, but I'll have that done when I write my morning updates. Now, I want to remind a lot of you, we work with you here. If you'd like to see my morning subscriber videos, let's talk about that maybe for a minute. If you're here watching, you'll see on the bottom there's a blue button. Just give that a click. That's how you can watch them. Number 2, we know a lot of you use TradingView software. And if you do use that TradingView software, we have put together a suite of indicators for you. All you need to do is go to our website to activate them. It is under the charting software area. Just go in there. You'll see it. Once you activate it on our website, we go in and we are members of TradingView and we'll activate the suite for you. So you can get my slow stochastics, the swing lines, the window envelopes. Outside days will light up if you want them to do it because they're so important. And everything that I do. And it only uses 2 pair. So you have to understand, I know that if you use TradingView, you understand how many pairs you can put, and that's what they call it. Think of it as indicators, what you can do on it. It's 2 slots that it takes up, so that leaves you plenty of slots for your own work, and away you go. How do you get this? Go to iraepstein.com under charting software. Call my staff if you need help with it, and away we go. I'm Ira. I will talk to you all at the evening updates. Remember, today is Thursday. It's not the weekend yet, so we have another set for you. I'll have them late in the day. You have a great trading day.